Hello everyone and welcome to another episode of Selling Greenville, your favorite real estate podcast here in lovely Greenville, South Carolina. I'm your host as always, Stan McCune. I'm a realtor right here in Greenville, South Carolina, and you can find all of my contact information in the show notes if you need to reach out to me for any and all of your real estate needs here in Greenville or elsewhere. I'm your guy, so please reach out to me. And just a reminder as always, please go ahead and rate, review, subscribe, all of those good things to the show. Like, comment, download episodes, just anything like that that you can think of, or that your podcast platform allows for you to do. All of those things will be helpful in order to support the show, get it out to as many people as possible. And so I would just greatly appreciate if you guys could do that. All right, today we are going to be talking about the market stats for Greenville. The Greater Greenville Association of Realtors just published their market stats for the month of June, which covers the months leading up through May. So they usually cull these stats by the 10th of the month, and then they release them about a week or so later, sometimes a couple of weeks later. I just got these stats today. I'm recording this on Wednesday, June the 19th. I just got these stats today, and I'm eager to share them with you guys. So I'm going to, if you're watching on YouTube, you'll get to do fun little screen share with me, and you'll be able to follow these stats in real time as I go through them with you guys. All right, we're going to start right at the top with new listings. New listings have been running hot. Very hot the past several months. I mean, really since the beginning of the year. We started off the year with a really splashy start when it comes to new listings. A lot of people who have been waiting to sell their house, waiting, hoping for mortgage rates to improve, realizing mortgage rates aren't likely to improve anytime soon. And so some of the we talk about pent-up demand a lot, and real estate demand and supply are connected at the hip because sellers tend to be buyers and vice versa. Not all the time, but a large portion of the market is that way. And so anytime there's pent-up demand, there's also pent-up supply. And in this case, there is more pent-up supply that's leaking out than there is pent-up demand, in my opinion. And so here's what we're seeing. The month of May had 2,214 new listings. That was up 15.4% from May 2023, which was 1,918 new listings. So now we have 3 straight months of listings over 2,000. We didn't have any months in 2023 with new listings over 2,000. So now we've had 3 straight months of new listings data that's higher than any month that we had in 2023. So that is noteworthy. 15.4% increase. Last month was a 28% increase. The month before that was a 2.6% increase. February was a 25.7% increase. January, 33.6% increase. Long story short, we are seeing some massive increases in new listings year on year. Again, this is pent up supply breaking out, leaking through and starting to enter into the market. People being forced to sell perhaps when they don't want to, but that is at the very least part of what's happening there. Pending sales, this is always a number that for the most recent month, which would be the month of May, it's always going to be inaccurate. It comes in low. So pending sales always looks awful, right? The month of May, if you're watching this on YouTube, it looks like we are down 35% year on year in pending sales. That's not true. We're going to back up to the month of April. So last month when the April stats came out, it said that April had 967 pending sales. Well, that got revised up to 1,501 pending sales. So obviously that's why I don't look at the most recent month's numbers, because that's a massive increase. That's over a 50% increase of a revision that they did to that. I'm not exactly sure why, as I discussed last week with Joel, why these numbers aren't accurate, but it is what it is. Long story short, that is a 3.5% decrease year on year for the month of April. Now, we've now had 2 straight months of decreases in pending sales. But I don't think that, if you're thinking that that's indicative of something crazy, I don't think that there is much to really worry about, because the month of May currently showing 946. Now, if we assume a similar revision is going to happen in May to what happened in April, then May numbers will end up being in the high 1400s. Well, May of 2023 was 1455 pending sales. So what I think is going to happen is once these May numbers get revised, it's going to be either right at what May 2023 was, so basically not an increase or a decrease, or perhaps a very, very slight decrease or a very slight increase. And I'm putting the probabilities at the moment at a slight increase year on year. So the month of May pending sales looking good, just reading the tea leaves on these numbers, but we've had 2 straight months of pending sales being down, and a lot of other indicators that demand has softened a bit this year. This has been the story of 2024. It has been softening demand, and that for sure is something that we are seeing in these pending sale numbers. What about closed sales? Closed sales has been interesting to watch, right? Because obviously pending sales and closed sales are connected. Pending sales, in case you forgot, is the count of properties on which offers have been accepted in a given month, and the closed sales is the count of actual sales that closed in a given month. So we've had now 2 straight months of positive closed sales. April was up 16.2% year on year. May is up 1.1% year on year. So May numbers, we had 1,605 closed sales. That's a very strong number for the month of May, up from 1,587 the previous year, May of 2023. So 1.1% increase. Now, would not shock me at all if June comes in a bit low. Let's look at what June was last year. March, April, May, June. Yeah, June is almost certainly going to come in year on year low when we get the June numbers next month. But with the pending sales numbers being pretty strong for the month of May, what it's looking like so far, that probably means that the following months, July and August, might be a little bit stronger this year. So we're seeing a little bit of ebbs and flows happening. And again, this data is interesting as you take it, as you see the trends over the long haul, but we can't get too caught up month on month in what exactly is happening. I'm more interested in seeing what the trend is. And the trend right now is that more often than not, our closed sales are stronger than they were the year prior. In 2024, generally speaking, stronger than what we experienced in 2023. So far, we've only had 1 month in 2024 that had a negative year-on-year closed sale number. So that's good. Now you're saying, but you said the demand is softening. Well, again, demand is a byproduct in real estate of supply. And so when you have supply numbers like what we're seeing, right? Supply jumping tremendously year on year and being extremely high. And we'll get into inventory here in a minute. If demand doesn't follow at a similar rate, then that means that demand is softening relative to supply. So that's very important. Even though we might think that demand might be stronger in a vacuum, in a year-on-year basis, but you cannot ever in real estate separate demand from supply. And so that is why it can be accurate. Two things can be true. You could have pending sales and closed sales be going up while the market is softening for sellers. And I think that we're seeing a little bit of that happening right now. Days on market until sale. This is another soft number. It went down a little bit month on month. April was 47 days on market. May was 46. But that being said, that wasn't as big of a decrease as we experienced last May when it was 44 days on market until sale. So it's a little bit higher than last May. Again, a little bit softer market right now. Homes taking slightly longer. So right now, on average, it's taking 46 days for a home to go under contract from the time that it's listed. Historically, that is, you can if you're looking at the graph on YouTube, you can see historically that is not too far off of what even, a lot of the pre-pandemic norms were. It's pretty comparable to 2019 data. So again, if the market feels, if you were buying or selling real estate in 2018, 2019, and you feel like the market feels like it did back then, a lot of the numbers that we're looking at mirror those numbers back in 2018, 2019. You might even say that nature is healing. Median sales price. Talk about this one. Obviously, this is one of the most interesting numbers on here. And of course, as I've said many times on the show, we look at median sales price to kind of determine the trajectory of the market. It loosely tells us appreciation. It doesn't exactly tell us whether the market is appreciating or depreciating, but generally speaking, again, you look at the entire trend. If we have 6 months in a row where prices are going up, that's generally speaking an appreciating market. If we see 6 months in a row where prices are generally going down, that's generally speaking a depreciating market. So we've been in an appreciating market for quite some time now, but the month of May was a 0%. We had the exact same number May 2024 to May 2023. 315,000 is the median sales price. That is exactly what it was a year ago. So we have not seen the median sales price increase for the month of May. Now, it had increased every other month this year, and even going back last year, almost all the months last year, it increased as well year on year, but not for the month of May. Now, what does that mean? Well, again, 1 month, it doesn't mean a whole lot just yet. There are a lot of examples on here. Back, even if you go back to, let's see here. I was looking at one of these. I think there was actually a May 2017 was almost exactly the same as May 2016. I've looked at this many times and seen, a lot of times where year on year, like December 2020, the median sales price ended, hold on, actually, let me look at this more closely. January 2020, the median sales price ended up lower than January 2019. So if you look at the data that I have here that I'm showing you on YouTube, it goes all the way back to 2007. There are several examples where prices actually went down year on year in various months. And again, in a vacuum, that doesn't mean a whole lot. These things can, these median sales prices and average sales prices can be skewed by big development selling all at one time or by, a lot of variabilities. We only have in Greenville, again, for the month of May, we had 1,605 closed sales. What if there was a big builder that came in and closed 100 of those during that month? That would really skew this data. So that's some of what can sometimes happen. And that's why we're looking at the entire trend, not just 1 month at a time. But I do think it is noteworthy. I'm not trying to blow it off. It's definitely noteworthy that there is not an increase year on year for the month of May. And that is definitely something to keep track of. However, on the average sales price, which I don't put as much weight on because that one really is skewed by really expensive homes. That's why it's a lot higher. So the average was 389,800. So basically 390,000. That is the highest we've ever had in Greenville. So the average sales price hit a new high. And that's, again, because of expensive real estate in our market right now. It is pushing that number to be where it is. But that's a 2.4% increase year on year over May 2023. And so, again, we'll keep tabs on that. I don't put a ton of stock into the average sales price, but I do find it interesting. If you want to know exactly what the average is in Greenville, it's 390. But if you really want to know more closely what the average is, the median is more accurate. It's 315, in my opinion. All right, percent of list price received. This is the percentage found when dividing a property's sales price by its most recent list price, then taking the average for all properties sold in a given month, not accounting for seller concessions. It went down 2% year on year. In other words, sellers are getting 0.2%, not 2%, 0.2% less for the home that's listed than they were a year ago. That being said, it is pretty close to what was pretty normal pre-pandemic. So it's at 98.7% for the month of May 2024. It was 98.9% for the month of May 2023. So a little bit softer. Again, there's a lot of little data points in these numbers that show the market getting slightly softer, but that's not a big drop, right? 0.2%. If you're looking historically, we've had some big drops, right? In June of 2023, it was nearly a 2% drop. July of 2023, it was nearly a 2% drop, again, year on year. So we're nowhere near that. We're at 0.2%, from 98.9 to 98.7. So again, noteworthy in that it's a little bit softer, but only a little bit. We'll continue to keep track of this and see what the overall trajectory is. Housing Affordability Index. This is the thing where, basically they encapsulate in one number prices of homes, mortgage rates, and income, and determine if a median household income can afford the median priced home. And if they can, the score is 100. If they can afford more than the median priced home, then it'll be over 100. If they can't afford a median price home, it'll be less than 100, and that's where it is right now. It's at 94 for the month of May 2024, which is exactly the same as May 2023, which should come as no surprise because the price came in exactly the same, right? We just talked about the median price was exactly the same as a year ago. Mortgage rates are basically exactly the same as a year ago. And so the only other part of the equation of this real estate love triangle is the income part of it. Well, I don't know exactly how GJR figures out the income that they plug into this, as far as the median household income. I'm not sure where they're getting that data from, but odds are that data is not data that refreshes every single year. It might, but I have a hunch it probably doesn't. And so all of that said, it should come as no surprise that there is no increase in or decrease in the Housing Affordability Index. But once mortgage rates start to come down, which based on what the Federal Reserve has indicated, and based on some of this inflation data and whatnot that's coming out, probably the earliest this might happen would be September. Might even be later than that. And even if that happens, even if the Federal Reserve reduces their rate, it's only going to have a minor impact on mortgage rates because they're not going to reduce it dramatically all at once. They're going to do a little reductions here and there. And so we're not going to see this Housing Affordability Index go down substantially this year, I don't think, because we need to see prices go way down or we need to see rates go way down. And even if they come down a little bit, I don't think it's going to be enough to really move the needle. Could we get back up to 100 by the end of the year? Maybe, but I would be a little bit surprised. Now, going to take a quick pause here to discuss our sponsor, Piper Insurance Group, my go-to insurance company for all of my homeowners, auto, and umbrella insurance needs. I haven't even said this before on the show. I was with an insurance company for a very, very long time, very loyal to them. And eventually they had some turnover in their office. It became difficult for me to work with them. And at that point, I switched over to Piper Insurance Group, and they have been phenomenal ever since. They're an independent insurance agency, meaning that they can quote from multiple different insurance companies. They're not just quoting from one single company that they're locked into. They can find you the best possible rate. They can tailor it according to your needs. They can invest. They can insure rental properties as well, investment properties like flips, rentals, ground up new construction, all of that. And they're licensed in South Carolina, North Carolina, and Georgia. So they've got this section of the company locked down. So I highly, highly recommend Piper Insurance Group to you guys. Would not have them on the show if I didn't believe in their product, if they weren't producing a great product to their customers. A lot of my clients have used them and they've been great. So please reach out to them. Their contact information is going to be in the show notes along with mine. So please reach out to Piper Insurance Group for a free quote on your home, auto, and or umbrella insurance today. All right, moving on here to inventory of homes for sale. Inventory, up 59.5% year on year for the month of May. Now, before everyone freaks out, this is a number also that is always incorrect for the most recent month. So we're not going to focus too much on that 59.5, but I will come back to it. Let's look back at April. April was also an eye-popping number, and we discussed this a little bit last month, my projections for April, but it was up 36.2% year on year. It went from 2,895 homes for sale at the end of April 2023 all the way up to 3,944 homes for sale at the end of April 2024. So big increase. We've now had mega increases every month this year. January year on year was up 12.9. February was up 19.9. March 22.3. April 36.2. So when I say supply is outpacing demand, this is exactly what I'm talking about. Because there are more homes just sitting on the market right now than there have been in years. Okay? Now, this May number is very interesting. Currently sitting at 4,716. That's going to be revised down. You know how I know that? Well, I look at this data every month. But let's look back at April. I just said April was 3,944. What was that number when before they revised it? It was 4,493. So they revised that down a whole 550 basically, if my quick back of the napkin math is correct. So they revised that down 550. So if they have a similar revision for May of 2024, then our inventory will be around 41 to 4,200 homes for sale in active status at the end of May. But that's still an eye-popping number, okay? If you're looking on YouTube, you can see the chart. I'm showing my watchers a line. That line is 4,000. And you can see that between 2016 and 2020, there were a few months that crested or came near 4,000. But that really wasn't the norm particularly after January of 2017. So we're entering a period here where inventory is, again, it's going to come in very similar, I think, to 2019. And that is what I keep telling people. It feels like 2019 in a lot of ways, right? And this is one of the nice things about having been in real estate as long as I have, is that I can make a statement like that, and it's an educated statement because I was selling real estate in 2019. It feels a lot like 2019 for me as a real estate professional. So I think that we're going to have a massive increase. It's not going to be 59.5% year on year, but after this is all said and done, I think the increase for May will be probably in the 40% plus range year on year. And so that's big. Buyers have more options of homes just sitting on the market than they have had in years, in at least 5 years, if not longer. If you're a seller, you need to take that into account as well. It doesn't mean it's not the right time to sell, but you need to be prepared and tailor your expectations that it's not 2021, it's not 2022 anymore. It's closer to 2019, and things are just a lot softer now than they have been in some time, as sellers are taking a beating. Buyers are really taking the beating, but it's impacting sellers as well with these mortgage rates being where they are. Month supply of inventory. Well, this number, I don't like to look at the most recent month again because it's literally dividing inventory by pending sales, which are both numbers that are inaccurate for the most recent months. So let's look at April and let's look at the trend. The trend is that this number has been gradually going up as this year has gone on. And April got up to 3.1 months of inventory. And I believe that May, that was, let me see how that was revised. That was revised from April was originally 3.6. That was revised down half a point. And so May is currently at 3.8 months of inventory. That's probably going to revise down to 3.3 or something like that. But whatever it gets revised down to, it's going to be the highest number that we've had since the pandemic. And you can see that very clearly on the dot plot that I have here that I'm showing my YouTube watchers. What does that mean? Okay, we've talked about this many, many times. I'm going to tweak something, though. I've been saying that traditionally 6 months of inventory is considered neither a buyer's market nor a seller's market. And that I believe that if we got to 4.5 months of inventory, that would be more the feeling today. In other words, the way the market is right now, it would feel more like a flat market at 4.5 months of inventory versus 6 months. Well, I believe now that that's probably more like 4. Okay? Because, I mean, I'm telling you right now, I'm already having sellers telling me, is this a buyer's market? I mean, this just feels funny. Listen, I'm not ready to call it a buyer's market yet. It's not in the data. There's a lot of other indicators to me, just anecdotally, that it's not a buyer's market yet. But I'm telling you, if we got to 4 months of inventory, it would really, really start to feel like a buyer's market, in my opinion, with all of these other things getting as soft as they are. So we've got to recalibrate here. We're not that far away. If inventory levels start to creep up towards 5,000 homes on the market at the end of the month, which would probably put us at about 4 months of inventory, I'm telling you what, it would feel very much at that point like a buyer's market to a lot of people. So that is something that's really fascinating that we really have to keep tabs on, because we have to change the old rules. The old rules don't apply. We're making up the rules as we go along here because everything has been so different the past 4 years, and we have to think differently. The market was fundamentally altered by what happened during the pandemic, and now we have to readjust our old ways of thinking. That is it for what I have for today's episode. Long story short, a softening market. I would still say it's still a seller's market by a thread, but it's pretty close to a flat market right now, just based on what I'm seeing, based on what this data is telling us. And we'll have to see if it continues to soften. Could we see a slight buyer's market in the future? I think we could. It's definitely in the cards, and it's way more in the cards now than it was a year ago. So that is either exciting or scary to some of you listening. But let me know if you're excited or scared and why. My contact information is in the show notes, along with Piper Insurance Group's information as well. Please reach out to them for any of your home, auto, or umbrella insurance needs. And please support the show if you can by liking, reviewing, rating, subscribing, downloading episodes, all of those things with regard to the Selling Greenville podcast. I'd appreciate it if you guys could do that. And we will talk again next time.